Good morning, folks, and welcome to today's video. So today I have just the one pair on watch, which is euro dollar, and I shall break that down for you in a second and give you my thought process as I always do. Just to touch on, I think it was pound CAD. Let me just have a look. Pound CAD. Let's just have a look at the entry because here's a prime example before we start off with my pair that I'll be looking for today, the entry that I will be looking for from euro dollar. If you remember yesterday, this is a prime example of why we trade the way that we do uh, on pound CAD. If you remember yesterday, I was looking for a push up followed by the consolidation afterwards above this area of value. And the reason I was doing so is because I said in yesterday's video, feel free to watch it if you're new to my videos. And if you didn't see that video, I said that if we broke above this area of value, the consolidation afterwards would confirm that this isn't some kind of bear flag to push lower, where we end up getting this kind of structure like that to push lower. And that appears to be at this moment in time what may be happening. Okay, so that's a prime example of why we wait for the consolidation above the area of value in this instance, and we don't just set a limit order here, because if you'd have just set a limit order here, a stop order here, okay, to trigger you in once price moved just above this area of value, I said you could easily be tagged in, tagged out, and then price does what I said that it may do, what it seems to be doing now. Okay, so the consolidation afterwards, this is a key bit if you're new to the way that we trade. The consolidation afterwards the consolidation afterwards confirms that price did not find enough liquidity here to cause it to move to the downside. Okay, so typically if there's a lot of liquidity here for a short position, okay, for price to move to the downside, price will typically just wick above, wick back down, which you can see in this instance it did. Okay, so I've just gone off there now, but yeah, so that's basically the logic. If price consolidates above the area of value, then that confirms that that's not going to happen as much as we could wish for it to be confirmed, and then we just look for that consolidation and then look to get long on the break or within it. Okay, so a very simple and effective thing that you can do if you're new to this way of trading, which will save you, keep you out of so many unnecessary losses. So that is pound CAD. I'm just going to let this do its thing now. I'm not surprised by this price action. This is the kind of price action that I would anticipate at this time of year. Okay, and it appears that that has manifested itself. So euro dollar on the higher time frames, the narrative as I see it is that we have, if we just zoom left on the weekly chart, the last area of consolidation that I could see to the left is here. So it's no surprise to me that we tap into here and move to the upside, okay, because there is volume here, okay. So if there's volume here and it's the last area of volume on the chart to the left, then this would be a good profit taking area for the bigger players who got short here to be getting out of their positions and then looking to get long, looking to exit their positions and then potentially get long, because they know that there is volume here. Okay, so when we tap into that area by way of this overall kind of three touch structure there, which has this middle section within it, it's no surprise to me that price rallied from the area there. So this is a completed piece of structure. I see no reason at this moment in time for price to come all the way back down to these lows. Then what happens? We tap into this exchange of liquidity where there was volume. Okay, on the flip side, how did we do it? We tapped into it by way of a 1, 2, 3 structure, an exhaustive move. This is non-progressive move. This is non-progressive price action for a move to the upside. Okay, there's not even much volume within this middle section. It's not like a deep middle section like that, which we could argue gave price enough volume to cause it to move to the upside. There is a middle section within this piece of structure which looks like it lacks volume. So it's no surprise to me that when we tap into this area, break just above, this represents a good area of value for the bigger players to be shorting it, especially when we near missed to this low and this low near missed to this low. Okay, so when that happens, when we have a series of near misses, price will generally take them out. We then break below and then we rally to the upside. So euro dollar There's no reason for us to come all the way back down to here now. Okay, because we've tapped into the base of this piece of structure. So euro dollar doing what euro dollar does best, and that's following the psychological structural patterns that we look for. So as I drill down, well, you can see, what do we have again? We have a structure where this high takes out this high, but it fails to tap into this area of value where there's volume. Okay, volume sat, which caused a big runoff. So we took out this high, but this high near missed to this high where there was volume. So what happens? We break above, catch people the wrong side of the market who believe that this is now support because it broke above. Okay, and now what I'm anticipating is a move back down. Okay, the reason I'm not anticipating a longer term move back down and not perhaps all the way down to here, okay, is because if we just flip to the DXY, which is the dollar index, you can see, which is the inverse of euro dollar. If you're new to this method, you can see that we've tapped into this exchange of liquidity where there was volume. We broke above, caught people the wrong side of the market, pushed down, and you can see that we broke above these highs and this exchange of liquidity there, and that we're trading well and truly below all of those. And where do you think the bigger players who, overall, this is a indice, lest we forget, but it seems likely to me that we will be finding our way down to here. Okay, but in the meantime, if we just analyze the structures, so you can see I've separated the structures here, we could be seeing a short-term move up to here. And if we just look at the daily, we could be pushing a little bit higher to form some kind of consolidation like this, okay, which would mean that potentially we could capitalize on a shorter term move up to these highs here. And potentially, if this was to form some kind of bigger flag, a little bit higher before something like this forms, and then we push down, okay? Now, if that was to happen, and if the DXY is the inverse of euro dollar, that means that potentially we could capitalize on a shorter term move on euro dollar, which could potentially take us down to this low here, or even just to the start of this consolidation here. If we just kind of separate this off, okay, even if we only got to there, that would kind of be the same sort of range as what we're seeing with the DXY on the flip side. Okay, so we may be able to capitalize on the short-term move down to these areas and potentially down to this sharp move, because there was a sharp move down here followed by a sharp move up, suggesting that there may be a lot of liquidity here that we may find our way down to before potentially those that longer-term move to the upside kicks in. So because of this, if a trade on this does shape up, I'll be managing this quite aggressively. Okay, I won't be managing this loosely because the DXY is positioned how it is. I'll be managing this quite loosely. But what I'll be looking for from this pair today is let's get those off the chart. Get the forecast out like that. Okay, I don't know what that's doing there. That's an old forecast. I did remove that, but TradingView is playing games again. So what I'll be waiting for, this looks like a little bit of a trap to me. Okay, and you might be thinking, well, why is that a trap? This looks like a little trap, so I will not be looking to get short here with some kind of flag above the area of value. You can do that in certain circumstances, but because of how the DXY is positioned and all things considered, I'll be waiting for a break below this area of value. So below this area of value here, to confirm that this isn't some kind of move like that, which forms some kind of bull flag to push higher. And one of the reasons that I'm saying that is because if we just zoom out to the weekly ever so quickly, or better still, if we zoom out to the monthly, okay, we do have to remember that, look at this monthly candle here, okay? So when we have these bullish candles which have a massive wick below them, so we have a massive wick followed by bullish momentum, especially when it's the 29th of the month, which it is. Of course, this monthly candle hasn't closed, But by the end of today, if price is sitting how it currently is, we would have a big bullish close here, which could give price the legs. You've got to remember that this is a candle which a lot of people will be looking, the bigger players might be looking, using as confirmation of a move to the upside, especially that given that we've already tapped into this area of exchange of liquidity there. Okay, so these candles in particular, ones like that look like this, do have a habit of moving to the upside. Okay, and if we look at the weekly chart, candles which look like this specifically, so where they have a big bullish body and a big green wick above them. Okay, but the important bit is that the body is has some fairly heavy momentum to the upside. These wicks tend to get filled, okay, before a move to the downside. So even though we do on the lower time frames have price action shaping up, which does indicate a move to the downside, because these candles in particular do have a habit of filling the wick more than any other candle I've ever seen, filling the wick before they move to the downside. We have to remember that the higher time frames hold more weight. Okay, so one of the mistakes people make is not that they're not very good at analyzing price action. It's just that they're camped out on the lower time frames. You'll see that a lot on Trading View. You'll see that a lot with people that are new to trading, and you'll also, that's one of the reasons why they're typically not profitable. One of the maxims that they hold dear is that on the lower time frames, price seems to move faster, therefore it should mean that you make more money. False. It doesn't work like that. It doesn't work like that at all. Okay, the data proves that people that do top down analysis rather than down analysis are more profitable. Okay, there are scalpers in this industry, but if you take the industry as a whole, people who start their analysis on the higher time frames and pay more weight to that, the higher the time frame, the greater the weight, they tend to be more profitable. So that's one of the reasons that I'll be looking for a break below this area of value, because then this weekly candle wouldn't look so bullish. Okay, particularly if we push down to sort of these areas, this would then be a high test. This weekly candle would close as a bullish high test as opposed to a bullish candle with a big green body. Okay, so with all that considered, I will be just went into a bit more detail just because I've got uh, only the one pair on watch today. Okay, and also this is pulled up quite sharply. I wouldn't necessarily anticipate this pulling up quite as sharply if we're going to move to the downside. The other clue, just to touch on it, yes, we're kind of retesting the back of this, but the clue for me as well that we may not be ready to commit is that we have the impulsive sell-off, which is what I would be anticipating, but a sharp pullback. We don't normally see sharp pullbacks like that if we're actually in the process of catching people the wrong side of the market of a big piece of volume like that. So for that reason, I'll be waiting specifically for a break below the area of value. We're kind of floating just above it at the moment, slightly through. I'll be waiting for a break below it, followed by the consolidation afterwards, which is usually the banks and the bigger players stacking their orders for the next wave lower. Okay, and then I'll be able to manage it even just down to the start of this corrective channel for something in the region of 3%. Okay, but I wouldn't be surprised going into New Year and with all of the things considered, if price just pulls up sharply as it has done on pound dollar, which is partly why I've taken it off of watch. And if we get something more like this and price just messes around, potentially taps into here, if we are moving short, that is, and then sells off, and that would, if we just look at the times, that wouldn't surprise me either, because then it would be going into the new year. Okay, many people may be closing their sell positions, which causes this to pull back sharply, and then the entry doesn't manifest itself. But regardless, just going into a bit more detail and just trying to keep sharp, trying to do what I always do, because if you take your foot off the gas and you take your eye off the ball and you assume there's nothing shaping up, then you're getting out of the practice of good habits. Okay, so what I'm trying to do and what the professional traders do, not the amateurs, they keep themselves in the practice of good habits both on and off of the charts, and that's how they maintain their success. Thanks for watching, folks. I shall bid you a great day. I wish all of you that have been watching my videos regularly, and those of you that are new to them, I wish you a very, very happy new year. I will not be making any more videos until the new year, most likely on the 2nd or whenever the market reconvenes. I shall have a look at that later today. But for now, have a great day. A very happy new year to you, and I'll speak to you again soon. Thanks for watching.